morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be starting afresh with a new indicator. In today's session, I will be explaining to you how we can use the indicator named Normalized Average True Range (NATR) to design and develop the algorithm using the Visual JForex platform for the profitable trading system. So let's get started. This is the Visual JForex board developed by the Dukascopy Bank SA. And in this session, the focus is going to be on the development of the algorithm, not the technical aspects of this indicator. For details regarding how it is calculated, you will have to refer to the earlier session which I had done in the introductory series. Today, we will be looking into the functional aspects of it. This is included under the trend indicators just below the Fibonacci pivot series. Last session was dedicated to the Fibonacci. Now is a new day, a new beginning, and here we have this NATR block. We have to define these 4 input parameters depending on which we will be getting this output value, which will give us the measure of the volatility in the underlying instrument, depending on which we can determine whether to go for a particular trade or simply to sit on the sidelines. This indicator doesn't really give us the idea of the direction of the trend. We simply use it to figure out whether the underlying instrument is trending or if it is going sideways. So when we see that large moves are happening, it can be in the either direction upwards or downward. It shoots up. As you can see from this charting, the underlying instrument is Euro USD. Candle period is of 1 hour, and I have plotted the NATR with the time period of 14. So this is the data for last 14 hours, and you can observe whenever we have the Euro USD dipping, as we have seen Euro USD in the downtrend for last couple of days. So whenever it has sharply declined, we have seen this upward momentum, upward jump of sort in the NATR. So that's how we can utilize this. We will take the differential between the 2 hours values, and we will see that if the difference is more than at least 0.2 points, that is in terms of percentage, it is going to be around 2%. And if we see that the differential is there, we will be looking to initiate the trade in the direction of the trend. So depending on the candle closing values, if it is lower, the closing value is lower than the opening value, then we will be looking to initiate the sell trade. And if the converse is true, if the last hourly candle close is higher, then of course we will be looking to initiate the buy trade, provided we have the NATR requirements as per our configuration. The benefit of the NATR, if we compare it to the ATR, is that we can compare it across the instruments. We have these in terms of percentages, so we can compare the volatility of any underlying instrument with a different instrument. For example, if I change the instrument to USD the values are comparable. We can see which instrument is more volatile, so that helps. Now we revert back to the Euro USD. Okay, so here we have this, and let us now head back to the Visual JForex board. First thing first, we will have to get the logical blocks in place. So the component section, here you have to drag it down, and the if else statement is listed. We will be using the on candle as our start point, and to get the instrument subscription done, we are going to need 2 of these, followed by the position amount conditions. So for that, this third one is also going to be needed. Okay, default instrument Euro USD, and it should be matched with the candle instrument. So I will check the candle instrument and compare it to the default instrument, and it should be same. So first input equals second input, and then the last ask candle instrument should be the instrument which we will manually choose here. um, Finding it difficult, let's give it another look. Euro JPY, and okay, now I got it. Let us now define the position amount condition. Position amount, all right. And there should not be any open or pending position existing on the account. So I will define the second input parameter as 0. I will change the candle period of this NATR to hourly. Shift value, the lookback period is going to be changed to 1. Time period, here the default value is 15, but generally the default value is considered 14, so I will change this as well. Not much of a difference will be there. You can keep it as per your preference. Okay, now I will explain to you what the logic is going to be in precise terms. So first I will explain to you the conditions for a buy trade. Here I think this will probably fit the requirement. We will be considering the jump in these NADR output values. So when we see that the NADR price, NADR output goes up by at the minimum 0.02. So here at the 7 GMT of 22nd of February, we have the line output at 0.1196. So let me check what happens on the 8 GMT. It goes to 0.133. So I think it will not really fulfill the requirement. Not here, but at 10 GMT, the difference indeed rises more than 0.02 compared to the 9 GMT. So at 10 GMT, the conditions are in place, and here the trade execution will happen. So this is where the buy trade conditions will be fulfilled, and we will look at the difference between the highest and the lowest of that hour, and we will take the difference, we will take the half of it, we will divide the total difference by 2. So whatever is the resultant value, we will take that and we will deduct it from the highest point of the last hourly candle, and that will be that will be the entry point for the trade. Okay, so the idea is fairly simple. Only two things are required here. We need the hourly candle close to be higher compared to the opening value, and the difference between the closing and the opening value will also need to be more than half of the difference between the highest point and the lowest point, so that it will ensure that the upward momentum was sustained at least for an hour. So here we have now seen the requirement for the buy trade. Let me now look for the conditions where I think the trade might have taken place. And somewhere here I think the conditions are good enough, looking good enough. So let me check. This is the exact day change. We have the 23 GMT value at 0.14, and then at midnight it goes to 0.16. Okay, so the difference is more than 0.02. So we have the NATR requirement in place, and as I explained to you while explaining the buy conditions, here the requirements will be inverse. We will need the closing value to be lower than the opening value, and again the same thing will be done. We will be taking the difference between the highest point and the lowest point, and we will then divide it by 2, and the resultant value we will add it to the lowest point of last hourly candle, and that will be our entry point for the sale trade, provided the difference between the closing value and the opening value of the last hourly candle is more than the difference between the highest and the lowest point. So that will ensure that the selling momentum was sustained. Okay, so these are the requirements. Now we head back to the Visual JForex board. We are going to need two of these NATR blocks with the varying shift values. So I will add one more of these NATR block. This will need to be changed to hourly, and the lookback period will be changed to 2. So we have the price data of last 2 hours, and we will be comparing to see whether the volatility is rising or not, and only if the volatility is rising more than our requirement, then we will be looking to initiate the trade. Now to look at the price difference, we also have to look at the price volatility data, and for that we are going to need the info components, the get historical candle, last hourly candle will do the job. So I will change the candle period to hourly here. The lookback period also needs to be changed to 1. I will join it to NATR. Alright, and I think with this we have these blocks in place to look at the price volatility. Now to initiate the trade we will also need two 10-second blocks. So I will add these two blocks straight away. The candle period is going to remain at 10 seconds for both of these, and the difference between the two is going to be this shift value of 1 and 2 respectively. Okay, and to look at the actual difference, let me get mathematical component, calculation expression. So I'm going to now need candle 15's closing, not closing, actually the candle high and the candle low, auto created variables, candle 15 and candle 15 candle low. Okay, A1 minus A2 and result will be the hourly candle difference. Okay, so we have this calculation block in place with the output value, which is going to be equal to the highest and difference between the highest and the lowest value of last hourly candle. And with this we stop for the session. We now have the bare bone structure in place, which we will use in next session to give it a more fuller look after adding the conditions for the execution of the buy trade and afterwards the sell trade as well. So I hope you have been able to understand the logical as well as the execution part of this algorithm involving the indicator, normalized, average, true range, and we will be continuing the work in next session. So do come back. For further information on the market developments, you can check out the Dukascopy analytics page, for which the link has been provided. For in-depth discussion, you can also join in on our Facebook page. For carrying out the testing on the historical data, you will also need the access to JForex platform. So all these links have been provided. Do check it out. Thank you all for joining in. See you next time. Till then, goodbye.